I can tell you really quickly, it looks like $2.34 for the third quarter. The street was expecting $2.26.
Yes. But the whisper number was $2.33, so that's higher.
Well, it's higher no matter like how you're looking at these based on these headlines. I only have headlines right now, not the entire issue. They also talk about revenue on a managed basis, which is the apples to apples number, $27.8 billion.
That's above
the $27.54 billion that the street was anticipating. So you can run through a lot of these numbers. Marty's sitting here looking at these
Stocks
numbers
up.
too. Yeah,
2%.
pretty significantly.
Looks like it, and at the very end of that, you can see it moved a little higher since just instantaneously with that. It was already up a little bit.
Marty, I'll throw a couple other numbers at you. Non-interest expense, $15.6 billion. Net interest income, $14.1 billion. Return on tangible common equity, 17%. Return on common equity, 14%. Just your quick reaction to these top headlines.
Well, we expected J.P. Morgan to come in a couple of pennies better, and that's what we're seeing right here. The good news is that it's in the revenue side. So we probably had a little bit better trading, a little bit better investment banking, and the NII number was actually better than what we thought, which meant the margin held in, which is going to be one of the key factors we're going to be looking at in this earnings season. Okay.
What other numbers will you be digging into? I can tell you about the provision for credit losses, $948 million. I'm not sure that matters as much as it used to. Commercial banking revenue, $2.27 billion. And then the corporate investment bank revenue, $8.81 billion.
So when you look at the provision number, why it doesn't matter because it's so low, it has to stay low. Right? Going back to what we just talked about, are we going into recession or not? As long as provisions stay at these historically low levels.
The bank itself, which probably has a pretty long leadway because it has so many customers and so many things that it can see, is not anticipating a recession. So that gets right back to your point.
Yes.
If we invert the yield curve, there are so many people who are worried that's a sign of a coming recession.
Right.
That's not what J.P. Morgan is signaling that it sees.
That's exactly right. And actually the yield curve's steepening now, so we're even coming out of the danger zone in that one metric.